farmers, and critically, farmers who grow crops like hemp, fruits, tree nuts, and vegetables. That's why we're holding this hearing today. The Farm Bill safety net programs have been vital for some producers, but we consider this Farm Bill must expand the support for specialty crops. This is an opportunity to decrease risk for our farmers, stabilize our food and supply chains, increase accessibility and healthy fruits and vegetables, and support an important sector of this agriculture industry. And supporting specialty crop producers is crucial for my state with a robust specialty crop industry. In particularly, Pennsylvania is known for its booming mushroom industry. In fact, known as the mushroom of the world. More than 60% of mushrooms produced in the United States is known right in Kennett Square in Pennsylvania. Woohoo! So much mushroom farms are significant regional economic drivers. According to the Penn State Extension, the industry employs nearly 9,500 people in the region and contributes estimated $2.7 billion to our local economy. But currently, mushroom producers are not covered under crops insurance. This exclusion could harm mushroom producers and the broader local economy. And that's not just mushroom problem, it's also just about Pennsylvania problem. A specialty crop of drivers of local economies across the country. The bottom line is that we can strengthen local economies supporting down these small farms. My colleagues and I have already seen working ahead to support small farmers. I'm proud to be a co-sponsor of Senator Brown's Local Farms and Food Act of 23. This bill will invest farmers by making it easier for them to grow their businesses, sell directly to their communities. This is necessary an investment in rural communities that will increase access to nutritious, locally grown food. It will cut red tape and make it easier for farmers to bring their products to market. I'm also excited to announce my partisanship Protecting Mushroom Farmers Act. This will be direct to USDA to study crop insurance for mushroom productions to help these farmers. And finally, I look forward to closely to my colleague, Senator Braun, to support farms impacted by the horticulture title.
Good evening, friends. I have important news to share with you this Sunday. The Internal Revenue Service is encouraging all taxpayers to take action as soon as possible to avoid a big penalty. The Federal Reserve has also just released new information regarding the U.S. economy. It looks like a recession in the United States may come later than expected. My dearest friends, please make sure that you watch until the end of this video. Also, this coming Friday, I will be announcing more winners for the Walmart gift card giveaway. If you would like to enter the weekly giveaway, friends, all you will need to do is click and like several of my videos and then comment below the keyword of each video that you watch. Dear friends, the more videos that you watch and then comment on, the greater your chances of winning the giveaways. Many CEOs, investors, and economists had penciled in 2023 as a year when a recession would hit the American economy. The thinking was that the U.S. economy would move towards a halt because the Federal Reserve was effectively slamming the brakes to stop inflation. But according to experts, the case for a 2023 U.S. recession is crumbling for a simple reason. America's jobs market is way too strong. Hiring unexpectedly accelerated again last month, with employers adding an impressive 339,000 jobs in May. Not only is that more than any major forecaster expected, but it's more jobs than the U.S. economy added in any single month in 2019. That was a very strong year for the jobs market. Mark Zandi, chief economist at Moody's Analytics, told CNN News, "This economy is incredibly resilient, despite all the slings and arrows, despite the banking crisis, rate hikes, and the debt ceiling." Mark Zandi is growing more confident that 2023 will not be the year when a downturn will occur. Not only did non-farm payrolls soar by 339,000 jobs in May, that is miles away from the dark predictions issued not too long ago. Last fall, Bank of America warned payrolls would begin shrinking in early 2023. However, some companies are indeed cutting jobs, especially in the tech and media industries. The number of announced job cuts has quadrupled so far this year, but the economic indicators suggest many people who are laid off are quickly getting rehired. Of course, it is possible that something may happen to change that story in the coming months, and there is growing evidence that consumers are feeling real financial pain following 2 years of high inflation. Dollar General slashed its forecast for the year and warned customers are being forced to rely more on food banks, savings, and their credit cards. Macy's blamed slowing customer demand for cutting its own forecast. Federal Reserve researchers have found that auto loan delinquencies are also rising, surpassing pre-crisis levels. The other problem is the Fed's war on inflation is hitting the economy with a lag. That means the full effect of the most aggressive interest rate hikes in 4 decades may not have been felt yet. This raises the risk that the Fed overdoes it, or maybe it already has. So, dear friends, what are your thoughts on the American economy? Please let me know what your thoughts are in the comment section below. If you haven't yet filed your 2022 taxes, now is your chance. If you missed the April 18th tax deadline to file your 2022 federal income tax return and pay any taxes, you should take action by June 14th to avoid a larger late filing penalty. The Internal Revenue Service typically assesses a penalty when you owe taxes or haven't filed a tax return. Interest also accrues on unpaid taxes as well as penalties. Normally, the failure to file penalty is 5% of the unpaid tax, up to a maximum of 25% for each month or part of a month that a return is late. So once you file, the penalty will stop accruing if your return is more than 60 days late. The minimum failure to file penalty is $435, or 100% of the tax due, whichever is less. To avoid paying the larger penalty, the Internal Revenue Service must receive your tax return by June 14th. If you do not pay the taxes you owe, you can be subject to a failure to pay penalty. The failure to pay penalty is 0.5% of the unpaid taxes. For each month or part of a month, the tax remains unpaid. If you don't have the money to pay, to reduce penalties, file your tax return as quickly as possible, even if you cannot pay the tax due. If you can pay some part of what you owe, but not all at once, consider applying for a payment plan. The IRS has both short-term and long-term payment plans available. If you have a good reason for not filing on time, you may be entitled to some penalty relief. Taxpayers who have filed and paid on time and have not been assessed any penalties for the past 3 years may qualify for the first-time abatement program. Well, my most awesome and my most dearest friends, that is the end of my daily stimulus update video for this Saturday. My dear friends, thank you very, very much for being here and for being part of this community. To say thank you and to show my appreciation, I will be announcing several winners every Friday for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, dear friends, all you will need to do is click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning the giveaways. Thank you and have a wonderful and very blessed week.